Indices on the Lal Street end at the day's low. The sensex and the nifty see a late sell-off dragged lower by oil and gas, metal, auto stocks. Mid-cap index relatively outperforms in trade.
Crude prices slumped to a three-year low, down 18% this quarter, with Brent slipping below $70 per barrel over concerns on a slowing global economy. Even as fears of short-term supply disruption due to Storm Francine spark a bounce. Oil companies' OMCs slip while paint stocks cheer.
BMW cuts its guidance, joining European automakers like Volkswagen that are already feeling the heat in a tough business environment. Indian vendors like Samadhan Motherson slump in trade. Separately, UBS puts a sell call on Tata Motors, while sources suggest to us here at CNBC-TV18 that JSW Infra may raise 5,000 crore rupees. Hello and welcome to a fresh new edition of Markets Forward, your go-to show where we get you up to speed with regard to today's trading session and we gear you up for tomorrow's session as well. I'm Marshall D'Souza and joining me is Rima Tendulkar. Hey Rima.
Hi, disappointing close for the markets, but we're going to be with you for the next 20 minutes with all the big news, key developments in the Lal Street, the top corporate voices and the events to track ahead. The start was flat, but by the end of it, we gave up nearly 200 points from the top on the Nifty.
Well, that's right, Rima. The bulls were getting very, very confident, and the bears, they sneaked in there, and the markets were under pressure in today's trading session. The last tick as well did see a bit of a recovery, but because of averaging, we end with the cut-off closure under 100 points on the Nifty. The problem is the Nifty Bank. Yet again, it flirted its way to around 51,400 odd, but it couldn't conquer that mark, and that's where the 50 DMA comes in. And the 51,400, 51,500 is a bit of a resistance zone for the Nifty Bank. Lower crude prices, though, they kept select stocks, select sectors enthused. Case in point being paints. You had Asian Paints as well as Berger Paints. Both of them were gainers. They were up more than 2%, while the markets were a little bit brittle. The advanced decline ratio, well, it tells you that more number of stocks that were declining than advancing, and that number totally turned around towards the second half of trade. But otherwise, there were quite a few winners from the broader markets as well, which explains why actually the mid-cap index did a relative outperformance. Rima.
Well, in the banking pack, the Nifty banking index was down 0.5%, but PSU banks were down 1.75%. In fact, the CPSE basket, the Nifty CPSE index was also under pressure. And not just PSU banks like State Bank of India, but even ONGC, Oil India. These were stocks which cracked in trade. On the way up, Bajaj group of stocks, so whether it's Rajiv Bajaj or Sanjeev Bajaj, they all did pretty well. You had paint companies, defensive buying in FMCG and pharma also continued. So that's the market action for the day. Let's also tell you what we have for you on our show. The top movers and shakers, so we'll get stock specific with Hormuz. The top story of the day, crude oil prices slumped to a three-year low, dragging oil marketing companies, but paint stocks saw an upswing. We'll tell you how crude prices impacted these stocks. And we'll also get you the key market events to watch out for tomorrow. But as promised, it's over now to Hormuz for all the big movers and shakers of the day. Hormuz.
A forgettable day for the benchmark indices and the broader markets alike, but crude was the story of the day, isn't it? And that had sector-specific impact all through the day. Start off with upstream majors, ONGC, Oil India, both of them seeing a negative impact in today's trading session. ONGC among the top losers today. Nuvama also anticipating some disappointment for the stock. On the flip side, paint stocks had a very good day, be it Asian Paints, Berger Paints. They are beneficiaries of lower crude prices, so that was a positive. Tata Motors, on the other hand, was a forgettable day for them as well. UBS having a sell call on at 25% downside projected there. Top loser on the Nifty, almost 6% lower there. JSW Infra was another one, a top gainer on the mid-cap index. CNBC-TV18 news break of a potential QIP in store. That kept the stock in the news today. Suzlon was another one that had another very good day today. Another second straight day of 5% upper circuit, and it's back to its previous highs of close to 50 or close to 84. Prism Johnson up almost 30% now in the last two trading sessions, and that another 12% gain today among the top gainers on the volume front. BEL was another one within the PSU basket, and it was the only gainer on the PSU index after it won orders worth close to 1150 crores. And as you mentioned, PSU banks, it was Union Bank of India that was the top loser on the PSU bank index. 3% down there. Now it's down almost 30% from its previous highs. Back to you.
Okay, thank you very much for that. MTNL has defaulted on its repayments to Union Bank. So Union Bank has frozen the accounts of the state-run telecom company, and that's why Union Bank is a bit subdued. But let's invite our guests on the show, Prakash Devan and Shrikant Chauhan of Kotak Securities. Gentlemen, thank you for joining in. Shrikant, with the kind of sell-off that we had in the last 2 hours, what does it tell you about how tomorrow is likely to play? And are there any stocks that you'll be watching out for?
Yeah. Good afternoon, Rima. Good afternoon, Nigel. I think, what I can make out is that the market it's consolidating. It is correcting from the highs, and it is going to consolidate furthermore. That's the overall view. Till the markets are not crossing 25,350, I think we are going to see furthermore decline in the market, because number of stocks are very close to their important support levels, and on the dismissal of those levels, we can see furthermore decline. So based on the technical formation, I think the markets are heading for the levels of at least 24,500, 24,400 sort of level. It's a correction, but yes, we can see furthermore decline in the near term. That's the overall view. So in case if there is any rebound because of any reason, we should look for reducing long positions till the markets are not crossing 25,350, which was the immediate highest level for the market.
Okay, all right, gentlemen, stay with us. Let's move to our top story of the day. Brent crude prices continue to trade near 3-year lows after falling below the $70 per barrel mark. This after the Organization of Petroleum Exporting Countries cut its demand guidance for the second time in 2 months. Oil marketing companies, well, they tumble close to 4% in trade. Sonal joins us with all of those details. Well, Sonal, how does it impact the OMCs and other crude sensitives?
Thank you for that. Well, a whole host of companies which will be in focus on the back of this crude oil price fall. Of course, just not oil marketing companies, the oil producers as well, because the likes of ONGC and Oil India, they have been seeing realizations to the tune of $75 per barrel so far, despite windfall taxes, and now it has gone below those levels as well. So Nuvama had put out a note where they say the earnings impact could be as much as 24% for FY26 if crude oil price falls by $10 per barrel below the threshold of $75 per barrel, and this is something which would be negative. Not only crude oil prices, even gas prices, remember, are pegged to crude changes, right? And next year they expected to increase the ceiling as well. But if this crude oil price fall continues, it could have an impact on some of the gas prices as well, and that would be negative both for the oil and crude prices and realizations going ahead. For oil marketing companies, of course, it's a significant reduction that we'll see in raw material prices. On the refining segment, UBS had said that integrated margins for diesel and gasoline, that has improved by around 2 rupees per litre so far in September, and they are averaging around 16.2 to 17 rupees per litre, which is already higher than the average that we've seen in last 2 fiscal years, which is around 10.6 to 11.7 rupees per litre. So already elevated margins. If this continues, that could continue to be the case, and that's the reason it would be positive for these downstream companies.
Got it. Thanks a lot for that, Sonal. So that's about the oil and gas sensitive stocks. But when crude oil prices move lower, normally pain stocks, they see a bit of an upswing because lower crude prices means that in a couple of months, they'll get the benefit of lower raw material cost. We have Mangalam who joins us to run that through for us. Mangalam, pain stocks, they painted a brighter picture today. Tell us more.
They did extremely well in today's trading session, and that was largely because of crude prices falling down. But that was, just one of the many reasons why plain stocks have been doing well for the last couple of weeks or so itself. In fact, last week as well, we saw a big gain on Asian paint. So the underlying factors are, painting a better picture for the paint sector as well, the incumbents at least. The first one is that demand is improving. All these companies have in their first quarter commentary said that this year they're targeting double-digit volume growth. It'll be led by rural demand as well. And at the same time, raw material prices are benign. So crude now at 3-year low works well for all these paint companies in their margins. The other imponderable for the paint companies has to be the competition, the impending competition coming in from Birla Opus. 6 months into, them having launched and announced their operations in the country, it seems like the incumbents are now sized the opportunity and the toughness of the competition, and it may perhaps not be as bad as they were anticipating, and that's what we've heard from the kind of conference call comments that have come in from either Asian Paints or be it Berger Paints. Kansai Nerolac, in fact, goes a step ahead and says that, they are now a lot more confident of beating competition as against what they were 6 months ago. Even someone like an Indigo Paints has not seen a further change in the competitive intensity. And all these paint companies have gone ahead and increased their prices by 1 to 2% as well. And as a result of the fear of competition, all these paint stocks were underperforming earlier. So now the valuations have also become a lot more attractive than what they were, say, on a 3 or 4 year average. So to that extent, there was limited, room for downside on these paint companies as well. So with all these things happening and these paint stocks rising, the three things that you need to watch out for going forward, one will be how Birla Opus itself performs in the most important festive season, the season of their launch. And secondly, how the festive season demand at a macro level is. And finally, keep an eye out on how raw material prices behave. For now, crude is benign. What happens when crude rises, or does crude rise in the very near future or not, is something we'll watch out for.
Thank you very much for that. Let me talk to Prakash about ONGC and Oil India. So Prakash, Sonal very nicely explained the kind of sensitivity these companies have to crude prices and the decline. Now, Oil India is up 130% so far this year. Even ONGC has gained close to about 40%. Do you think there's downside in these stocks?
So, there could be intermittent corrections that could happen in this journey. But what's helping them is not just the final realization levels of crude, but it's the sheer scale and efficiency that they've built in over the years. I can tell you ONGC is actually sitting on such a huge set of reserves, not only from oil, but also gas. And, while gas prices also have softened, as we know, it's very clear that the demand for gas in India domestically is far more realizable in that sense by ONGC and the likes of Oil India, who actually are able to, create this output in a faster way. So I don't think these intermittent price cuts in the journey is going to actually deter any kind of the growth trajectory. Most of the portfolios are looking at these stocks, particularly ONGC, with at least a 5 to 7 year. In fact, none of the reports talk about 1 or 2 year target. They always look at projections which are 5 years ahead. So my sense is there will definitely be opportunities for people to buy at, on these levels whenever there's an intermittent drop. But otherwise, for the long haul, I think they are wonderful businesses to own, especially from a institutional perspective.
Okay, all right. Thanks a lot for that, Prakash. We'll come back to you with more queries. But let's shift focus to the auto sector. Several automakers were under pressure after BMW cut its EBIT guidance for 2024. Now, sluggish demand in the Chinese market and issues in the braking system, they are the key reasons that they're citing. Vinny joins us to fill us in with the impact on the Indian auto suppliers. Well, Vinny, take it away.
So absolutely what happened is BMW is actually now the 4th OEM globally who has cut their guidance this year, followed by previously we had seen Porsche, we had seen Volkswagen as well as Mercedes, some of the other OEMs who had cut the guidance. Now BMW specifically cut their guidance, sluggish demand in the China market as well as a braking system issue that came in terms of supply from Continental, who is a manufacturer of these braking systems. So that was the main reason that we saw the pressure coming in. BMW cut their guidance to 6 to 7% EBIT margin. Previously, the guidance was 8 to 10%, and this impacts these suppliers. There are 36 Indian suppliers who supply to BMW. Some of the names like Samil, who has around 5% of the revenue contribution for BMW, Rico Auto, Suprajit Engineering, Seat, Good Luck, all of them, in terms of contribution ranging somewhere between 4 to 11% for all these companies. So this is very important to keep an eye out on, because this surely saw an impact coming in, and how will this work out for these companies is a key factor that we are going and keeping an eye out on going forward as well. Now, talking about the peer JLR, not much of an impact this time because JLR has already factored in the China market sluggish demand. So yes, keeping an eye out on that, but clearly pressure came in on these auto anch names, the suppliers to BMW today, especially Samil are seeing a very sharp fall.
BMW also had a tie-up with Tata Tech, where they were planning to develop some automotive software. So watch for Tata Tech too. But Vinny, Tata Motors stumbled close to about 5.5%, and UBS has come out with a negative note.
Yes, so UBS is maintaining their sell rating on this one. Target price at 825 rupees per share. What they're highlighting is that mainly the rising discounts that they are seeing coming in, especially for their new range and new launches, which did very well for JLR specifically, was Defender, Range Rover, as well as Range Rover Sports. Now they expect these discounts to furthermore see a rise. Marketing expenses are already increasing over there. So yes, despite that, they are expecting some bit of a pressure. Their volumes, that is expected to peak out now. So that will be a concern going forward. And the lack of any new ICE as well as hybrid launch, that is a concern that UBS is highlighting that could be for JLR going forward. And that could lead to a significantly lower number in terms of FY26 financials for JLR. So big concern coming in on that front. And that is why Tata Motors clearly among the top losers on the Nifty 50 and a top track for the Nifty 50.
Okay, all right. Thanks for that, Vinny. Well, Prakash, wanted your view on these names. Is it overdone? Particularly on the UBS note, one was factoring in that the analyst who wrote this note has always been negative, and actually the target price is higher in comparison to what he was initially talking about. So what's your view? This 5-6% decline is a buying opportunity, or do you think it still has more catch up on the downside?
So, Nigel, the market is telling us a very clear, the message is very clear. At times, you need an excuse to sell. And these reports do give you a very, very reasonably well structured kind of a reason and excuse to trigger a sell. But I believe the contention that JLR can't grow globally and will face issues and have pressures on financials, demand peaking out, I think those are a bit overdone. There's nothing that has changed between yesterday and today that would kind of start looking at this or warranting too much of attention on the downside. I think it is a time to look at Tata Motors from a slightly more holistic perspective. The India business is doing quite well. And the commercial vehicle will start adding to it also while they innovate themselves globally and have more and more of EV launches on the Jaguar stable. So, all in all, I think it's just a bit of a overdone kind of a thing, as I said earlier. I would definitely look at buying it at these levels or even add on dips for the simple reason that the next year and a half, it could again surprise us with so much of it going in its favor on the balance sheet, deleverage and all that. So quite positive. The BMW thing is, again, I'm saying the BMW thing has got more to do with a shift in strategy, which will take some time. It's not something that we need to get alarmed about on a single day. But yeah, markets tend to behave a bit erratically when, it's looking for those kind of excuses to sell off.
Okay, Tata Motors was also, I think, the big winner of 2023 when the stock had doubled. Shrikant, a chart check on Tata Motors and even Bajaj Auto, which conversely has done very well this year.
Yeah, I think for Tata Motors, the level of 950 is very, very crucial because it's a support of 200 days simple moving average for the stock. And actually, it was doing well. But after this particular development, the stock has turned the entire pattern on the downward side. So in case if it doesn't stop at 950, then the stock can fall to the levels of maybe 875 or 880. That is the overall view that we can see on the charts. But for Bajaj Auto, I think, yes, the stock is consistently forming higher top, higher bottom series. But at the same time, if we see the oscillators, then there, I think they are lagging somewhere. So we could see some correction in Bajaj Auto. At these levels, I think risk-reward ratio it's extremely unfavorable. So if there is any correction, then only we should look for taking bet on Bajaj Auto. But otherwise, at these levels, it is better to stay away.
Okay, let's also get our viewers the CNBC-TV18 exclusive. JSW Infra surged nearly 6% in trade. We learned from sources the company is looking to raise significant funds. JSW Infra is looking to raise nearly 5,000 crore rupees via the QIP route. The move is to meet its capex requirement and to comply with SEBI's minimum public shareholding norms. JSW Infra told the exchanges that the proposal for the QIP fundraise has not been placed before the board. Okay, with that, gentlemen, we're going to slip into a very short break. We thank Prakash and Shrikant for joining us today. We'll come back on the other side with the top corporate voices and the key events to watch tomorrow. Welcome back. Let's take you through the top corporate voices of the day. So first up on our radar, we have Brigade Enterprises. MD Pavitra Shankar told CNBC TV18 that funds from their 1,500 crore QIP will be used as growth capital. The company added that the first quarter saw an impact on sales and launches due to delay in approvals. But for FY25, they're looking at a 15 to 18% sales growth. On the hospitality business, the company says there is an element of seasonality, but they are guiding for a 10% ARR growth.
We also spoke to the management of Tata Steel, the MD and CEO TV Narendran, who says that the Chinese steel industry is in bad shape and is selling steel at a price where they're losing money. He bats for protection from Chinese imports to India, adds that steel demand is reasonably strong in India, though construction activity is a bit low, but that's due to the monsoon.
And a CNBC TV18 exclusive and the big corporate voice of the day. India needs an airline like Indigo to match global standards. That's the word coming in from Peter Elbers, CEO of Indigo. Speaking to CNBC TV18, he added that all decisions taken by the airline in the last 2 years was to meet the target of becoming a global player by 2030. The next step for Indigo is to move to the global stage with the induction of its new aircraft. Speaking about Indigo's business class, Elbers said that by the end of this calendar year, the Delhi-Mumbai route will be fully business class equipped. He also added that they will have a business class service on 12 routes by the end of 2025.
Well, before we wrap, let's get you some key events that you need to watch out for. Mangalam is joining in to give us that neat list on all those events. Mangalam, take it away.
Well, it's a Thursday tomorrow. Apart from your birthday, it's also the Nifty expiry, so we'll keep an eye out on that one. All eyes in the last hour of trade, Nifty weekly options expiry. And thereafter, there would be important macro data that would be coming by as well. For India, we have the July IIP and the August CPI coming in. And in the morning itself, Paytm, that's been a stock which has been in focus. It's the annual general meeting of Paytm, which will be webcast live from 9 a.m. So our teams will be listening in and bringing you all the key headlines from there as well. Then we have a listing to Sri Tirupati Balaji lists tomorrow. And then later in the evening, all eyes will be on the US PPI inflation. That'll be extremely crucial to track ahead of the Fed meet next week. And we also have the ECB interest rate decision, which everyone on the street will be keeping an eye out on.
Thank you very much for that. And with that, it's a wrap in this edition of Markets Forward. We'll be back with more news and updates.